Well, good morning, everybody, and welcome to another Monday morning market review with yours truly, Ian Giffen, on behalf of GoPro Trading. So, a really exciting week last week. I'm sure you'll agree with me. And those of you who are trading our strategies that we've taught you, I'm sure you'll agree it was an excellent week last week. The overlay that we're testing in fact, lost a little bit, as you would expect, in a week which is very good for our core strategy. So, great week. It started off in an interesting fashion with quite a bit of retracement. I'm sure you'll agree. Certainly some of the lower time frame strategies like the H4 impulse, we got stopped out on a few trades that were looking promising. But by the end of the week, it was a really, really good week across the board for those core strategies. So I'm going to spend a bit of time today looking at quite a few of those trades. So we might have a slightly longer session today. Also, obviously, as you will notice, I'm posting this as a recording. So if you do have questions, feel free to drop them into the comments below. A little bit later in the week, we're going to be spending some more time with our members as well, just delving into some of these trades in a bit more detail. And some of the technical analysis aspects that showed itself that came out last week. So look out for our next training that we're going to be doing through the course of the week for those of you who are members inside of the private members group. All right, so starting off as always on Euro US dollar. And when I referred to previous sessions as well, for those of you who haven't had a chance to watch those, you can either go back and watch it, or if you're not part of the private members group, I do apologize for that. So I will refer very often to something that we covered beforehand, and I'll try to just get everybody up to speed on that wherever possible. Okay, so here we have the weekly chart starting off on a higher time frame, and for some time now we know we've been outside of our channel. What's nice about this as well, it's a valid W pattern, so it fulfills both of those selection criteria. But as we discussed last week, we had this isolated low where that low test candle was showing interesting respect for what was the resistance level inside of that channel, and obviously now support. And last week's candle isolating that low, so giving us reason to believe that we are into the next potential impulse wave in this bullish trend on the weekly time frame. So that obviously, as you know, is a signal to drop down to execution time frame for the daily impulse strategy, which really requires us to have an impulse candle, as you know, on the daily time frame. But it was only Friday's close that gave us that. So that being the case, it means that we need to look again just to make sure that yesterday our final selection criteria, I beg your pardon, on Friday, our final selection criteria were met, which means that we could still look to execute a daily impulse on the daily time frame. So first thing this morning, really, you should have been looking to go long on this one for Euro USD on a daily impulse. We'll just have to double check those parameters, obviously, to make sure that they are our ATR conditions are met. But in principle, this is what we're looking at. So on this one, we're looking at approximately 159. So there's our standard take profit is somewhere around that level. So you can see even just with the naked eye that clearly meets our minimum reward to risk criteria for this particular one. So there you have it. You should be in, and then obviously the rest is down to trade management through the course of the week. So that's not the case, however, for the cable. As I'm sure you'll agree with me, we've been in the appropriate conditions for this one for quite some time. The end of the retracement wave, a very brief retracement wave that we had a few weeks ago, set us up already, as we discussed in last week's session, for going long on daily impulse on this. And of course, that was very successful. You should have hit your take profit on that if you're using standard targeting already here on the daily time frame. So we'll see quite a few of these daily impulse and H4 impulse trades. Speaking of which, of course, if you were trading H4 impulse, when you have reason to believe that you are into an impulse wave on this time frame, of course, then your execution time frame is on H4. But I've got quite a few examples on some of the other pairs to show you on that. As I said, you can see we had a bit of a retracement across the board in the early part of last week, including on these pairs where the conditions have been met for our strategies. You'll notice as well that this was a great continuation entry for those of you who trade that. If you're trading something like the short kickstart, depending on your targeting, you may well already hit take profit on that. In fact, I'd say if you're using the 1.2 to 1 initial reward to risk ratio on the ATR, then absolutely you should be doing that. So you should have hit that take profit. All right, so the one thing that this also illustrates is that the beginning of last week, into, I'd say through to Wednesday, it was a bit trickier. It wasn't looking that great as a week. So it's a perfect example of how important it is to be consistent. In my training, I keep talking about the fact that the heart and soul of consistency is the ability to keep taking the next trade. You have to take the next trade, and especially when you're trading these more advanced strategies where which reflect convexity. It's more important to not miss the next winner than it is to avoid losing trades. Convexity implies that your downside is limited and you're maximizing your upside. Another way of putting that is that when we win a lot. When we lose a lot less. So, even if you're losing the majority of your trades, you're still profitable. That's really reflects convexity, as you know. Okay, so that's the pound. There was a couple of things on cable, obviously, that but this wasn't the most interesting stuff that we had last week. Not much going on dollar yen. Obviously, we did have an overlay. I think we discussed that last week, that when we took profit on that. It is interesting that through the course of last week, it did respect that resistance level. Let's see what happens this week, because we're still in that bullish wave on the weekly time frame in any event. But there you could see that bullish weakness being reflected on the daily time frame, where it pulled back inside of the channel. So for those of you trading the potential W pattern here, it does not conform because we've got an inside C close. So you would not go for that. But if we do get a close outside of our channel, for the channel traders, you may well be looking to trade this on the lower time frame. Of course, dollar yen, certainly the week before last, as you'll recall, we had some nice winning trades, and I think maybe even the week before that. So last week, for those of you who were still going for it, bearing in mind that when we were inside this bullish wave here, we were in fact still outside of our channel. So this was a tradable impulse wave as well for the lower time frame. But as you can see, that was through the early part of last week. The rest of the week was really just a pullback on this instrument. The joys of living on a farm. Okay, so dollar Swiss, likewise, you can see here that this is just that inverted picture, really, what we saw in EURUSD. Again, on the weekly time frame here. So looks like we are getting back into some bullish activity here, though, which would show a bit of a breakdown in the connection between the euro and the Swiss franc. They're obviously highly correlated. And dropping down to the daily time frame, also inside of that channel, we had a losing overlay here with that strong reversal through the course of last week. This is in fact at the moment looking like it's going to give us a valid W pattern, even though we are still inside of the channel. So keep an eye out of that through the course of, well, by the end of today. That might be something for those of you trading just the WM patterns, might well give you a setup for this evening. But still moving along to well, this is not actually one of the more interesting instruments that I wanted to look at. So on USDCAD, on the loonie, we've been in this this bearish trend for a while, but as we spoke about here on the weekly time frame some time ago, it's shown significant weakness because it wasn't able to sustain itself outside of the channel about a month ago, really. But subsequent to that, we did talk about this last week. It's shown in this bearish move that it's breaking outside of that channel again. So with the close outside of the channel last week, it certainly is setting us up for some potential trades on the daily time frame for a daily impulse. And in fact, with that bearish impulse candle on Friday, unless of course, as I often recommend you do, you're waiting for the retracement, that could have been a short as well. I do like to wait for the pullback personally. So it was just a day late, really. If we got that bearish impulse candle over there on Friday, I would have absolutely been raring to go with this one. But let's move on to some of the more interesting instruments again. So here we have another picture perfect example of what we talk about when we're looking for established trends. We haven't had conditions like this for quite some time, where you just see this continued established trend doing as it's supposed to, in inverted commas, picture perfect in any case. So once again, you can see in that retracement wave over those several weeks, it came back down to the support level at the top of our old channel and respected it perfectly. So it opened a bit lower a few weeks ago, and then it continued very nicely over the last couple of weeks. So we've actually had 3 bullish weekly candles in a row now. And last week's impulse candle also giving us an impulse wave closing above that previous wave high. So all the way along, this has been valid as a daily impulse. We've spoke about some of the overlays beforehand. Some won, some lost. But I think we had 2 winners here and 1 loser. But here we had our first daily impulse setup that we were looking at, and I spoke about this, I think, last week, where we got long on this, and then of course we had that retracement through the early part of last week. However, using our 2 5-step trade management rule, it kept us in that trade. What was interesting about that, of course, though, is that it was a valid setup to go short for an overlay, which ended up being a small loser, of course, as this retracement came to an end. Stopped us out for about just over 0.4 of a risk unit. But that in itself was another setup for a bullish overlay. So a bearish overlay followed by a bullish overlay, which went straight to take profit. And we got a full winner on that, all the while still having a bullish daily impulse trade running, which survived that retracement with the 2 5-step rule. So that's still going. Obviously, our take profit is a little bit higher, but that the risk on that we should be able to manage down to break even pretty soon, unless we have some very violent reversal over here in the market coming all the way back again. But for the moment, that's looking just peachy. It's perfectly outside of the channel with that strong breakout candle on Friday. So unless something really major changes, then it wouldn't be a surprise to see a continuation of that. Today being Monday, obviously we very often see a little bit of a retracement through the course of a Monday, but the daily impulse being what it is, it takes some time for it to pan out. All right, so that's the Aussie. You'll see on the Aussie pairs generally that picture shows itself again and again. The Kiwi is a different story, obviously. Here on weekly, still tested that resistance level without being able to break out of it on the weekly time frame. So not as much strength on that, which obviously also is reflected on Aussie New Zealand dollar with this long bullish move that we will see when we get there. On the daily time frame, however, we did have a breakout on Friday of the channel. So both our 4-wave and 3-wave channels have had a nice strong breakout, and that clearly then also gives you the opportunity to drop down to the 4-hour time frame, look for that retracement, and potentially to get long here on an H4 impulse. So those of you trading that strategy, I'm pretty sure you know what to do there. Right, so moving to the yen crosses, again here on a weekly. Last week, well, in fact, I think as we discussed before, we've had these channel breakouts. These two candles here did close outside. So last week already, we were looking to get long on this with a daily impulse. And there you can see where the trade actually took place. This is a setup which I know many of you took without waiting for that retracement. So if you'd done that, you would already be in this trade and you'd be managing that risk down already quite substantially. So in fact, it's just unfortunate that Friday's candle, even though it's a bullish candle, didn't give us a higher close. Otherwise, we'd have been able to trail the stop a little bit further. But should we get that higher close today, then I don't see there's any problem doing that. So pretty close to being able to get the risk substantially down on this. But as you can see, bullish cyclicity is still intact. So let's see where that takes us. Now, this is obviously a valid breakout of our 4-wave channel. We have reason to believe that we are in the next impulse wave of this. Of course, that means that this is already valid for us to look at trading on the lower time frame strategies. Yeah, that you just need to look at again today. You could even have been looking at that from first thing this morning, in which case you would already be into a bullish H4 impulse on this one. Just be sure to manage it actively. All right. GBP yen, here you have that pound strength showing itself very, very clearly once again. So this is something we've spoken about before. We've been trading this now for almost a month in a bullish direction. So here we have the daily impulse that we discussed, I think last week or even the week before. That went on to hit take profit through the course of last week. And that gave us the opportunity after this little pullback here to get long on another one. So here we are, in fact, very much again trading this still on a daily impulse in a bullish direction. So yeah, pretty straightforward. Dropping down to the 4-hour time frame as well. This is very clearly, let me just go back to daily, very clearly, not just last week, but even the week before, into a strong bullish impulse wave on the daily time frame, which of course is perfect conditions for the H4 impulse. But having said that, here you'll notice we had we got stopped out on an H4 impulse. I think that took a while. That's what this is over here, all the way through to there. That's where we got stopped out on that H4 impulse. So using our 3-6 trade management rule for this particular time frame. But we did get another trade shortly after that, which we got into, and that we got to break even. And then on, well, when was that? Friday. Friday, we actually hit take profit on that. And here we have that, just if we just again today, we on the daily time frame, we are still in that bullish wave. And therefore, this is, in fact, another setup to go long on this one. Monday being as Mondays are, we're seeing a bit of a retracement there. So if you're not long on this already, then you just need to wait for those conditions to reassert themselves. Okay, so the pound strength has really been one of the solid themes of the last several weeks, I'd say. Swiss yen here on weekly again, you can see how that channel boundary has been tested, but we haven't had a breakout on that. In fact, the failure to break out here on Friday has given us a potential bearish overlay. So let's see what happens on that one. Remember, folks, that the overlay strategy is actually not designed specifically to be profitable. It's really a break-even strategy. It's designed to make money when the core strategies are losing, to reduce the maximum drawdowns on your account, which is obviously very important when you are trading other people's money. And that's really what we teach you to do at GoPro Academy. So, all right. So yeah, nothing much really there for us on Swiss yen. There you could see what that looked like through the course of last week on the daily time frame. So it did give that breakout. If you were looking to trade this on the H4 impulse, I don't have any of that analysis on here, but for those of you trading H4 impulse, then you will know that whatever day that was, sorry, 1, 2, 3, 4, 5, that was being Tuesday, you would have been looking to get long on that. Let's just have a quick look. Just want to make sure that we cover the bases here. Yeah, Tuesday got long. You would have been stopped out on this, but for a smaller loser, so maybe about 0.5%. So it wouldn't have actually got to the take profit on the on this particular pair. And again, that's what I was saying earlier. You know, when we had that retracement through the course of last week, there was some interesting behavior. We had some trades that just got stopped out quite quickly, but by the same token, others went straight to take profit as well. Right, here we go. CAD yen, I think, is one of those that I wanted to spend a bit more time looking at. So here we have the weekly time frame. We managed to get that breakout. Well, it's 3 weeks ago. It closed outside of the channel. It's not a valid W pattern, but certainly for channel traders, we were looking to get long on that. We've probably discussed the trades on this before, but for those of you who haven't been party to our previous discussions, this was a daily impulse. Gene, I know you got long on this, and that's obviously, looks like this morning, in fact, gone on to hit our take profit. But yeah, you'll notice that through the course of last week, it really just languished, but we were able to get that stop to break even and just let it do its thing. So looks like it's finally done that. Just looking at some of the other daily impulses there, or this is probably H4 impulse, in fact, maybe not. So as I said, you know, we've had the valid conditions for daily impulse for about 3 weeks now. And there you would have seen another potential daily impulse set up also on Friday, of course. So had you hit or at least been at break even, which you should be on any preceding trades, if you haven't hit your take profit yet, then this is a setup to go long again with that impulse candle on Friday. So this morning you would actually be long on this already. So quite a nice setup for that. And likewise, because we have reason to believe we're in an impulse wave here on a daily trend, we were able to drop down to the 4-hour time frame, and here you can see on Friday, perfect little setup after the pullback, impulse candle, got long on that, and that hit take profit through the course of Friday. So we did also have a losing trade here on the H4 impulse earlier last week. So a good example of how the strategy works, where we got a winner, a loser, and a winner. On the loser, we lost, I think, about 0.85%, quite a big one. But on the winner, it was almost 3%. So one winner, one loser, and you're over 2% up. I think that works pretty well for me. Yeah, so I think likewise, if we look back a little bit further, these two H4 impulse trades, the one was a loser and the one was a winner. And if you're using advanced targeting on that one, well, you actually scored a little bit more. So yeah, the H4 impulse was very active last week, and it gave us, I think, pretty close to that 50-50 proportion of winners to losers. But when your winners are on average triple the size of your losers, you really don't care. Okay, Aussie yen, again, this Aussie picture, you know, we're seeing it across all of these Aussie pairs, absolutely picture perfect, where we've got that breakout, retracement, respecting of support, and the reestablishment of an impulse wave that we're still in. So again, also for going on a month now, we've had valid conditions for a daily impulse. And the one that we got into the week before last hit take profit on Friday. Again, we were able to get this to break even quite some time ago. And through the course of last week, we had it languish a little bit. But Friday, that strong impulse candle went straight to our take profit. So a really nice reward to risk ratio on this one as well, about 3-to-1. Dropping down to 4-hour impulse, of course, because you know, whilst we're in these impulse waves of a trend on daily, you know, those are valid conditions for our H4 impulse. So we spoke about some of the H4 impulse trades previously. We've had a winner there on the 11th and then on the 16th last week, you could see how that trade did not pan out. It actually got stopped out. And there you could see that very flat market movement consolidation for a couple of days here on the 4-hour time frame. But because on the daily time frame, we were still able to keep, especially once we had reason to believe with that inside bar last week, Thursday, there's absolutely no reason not to then look for a trade where, and then we got into, remember the rule with a 4-hour time frame, the definition of an impulse candle, there we had it there on the 19th, and that went straight to take profit. If you're using advanced targeting, you would have only been stopped out on that in the last hour or so with a substantially bigger win. So another very nice pair to be trading across all of these Aussie crosses, basically. So Kiwi yen, this one looking a lot better, obviously, than what we saw on the Kiwi dollar, and this one again, we've seen that support level being respected, and since then, over the course of 1, 2, 3, 4, 5, this is the 6th week, so 5 weeks, we've seen higher highs. And just a continuation of this impulse wave. So that has been valid trading conditions for daily impulse for quite some time. And we're currently in one that also survived that pullback last week with our 2 5-step rule. Still waiting for it to hit the take profit on that one for standard targeting. But we did have that winner that hit take profit last week, Tuesday, I think it was as well. So remember, once you break even on a trade, folks, you can actually go again. So don't hold back. I've seen a few people not actually getting into enough trades when the conditions are appropriate because they've still got a trade that hasn't hit take profit. As long as you have reduced your risk on your existing trades, particularly if they break even, then feel free to go again. All right, so likewise, obviously, similar picture looking at H4 impulse, there was a loser and there was a winner. 50-50, we'd had a previous, what was this one? I think this was also, must have been a losing trade here. So if you were looking at these three, a losing trade, and a winning trade, well, on this pair over here, that would still give you about 0.5% in profit, despite the fact that you'd lost 2 out of the 3 trades. Convexity would work again. EURGBP, I mean, this has just been going on for quite some time, obviously, here on the weekly time frame. Lovely, long, extended, bearish impulse wave outside of the channel. So perfect conditions for daily impulse. We're still in a bearish daily impulse over here. I mean, we've had bearish candle after bearish candle for more than a week, which of course then is also perfectly valid for H4 impulse. And there you can see we had a couple. There was that H4 impulse. And had you, as I say, got yourself to break even, you would have even potentially gotten short there. And again, another bearish trade here. So this one, again, Monday morning pullback. Let's see what happens with that. But we are still short, very much short across the board on the EURGBP. Again, that's that pound strength showing itself here. Euro Swiss, you guys know what my opinion of the Euro Swiss is. But very important for our currency strength meter. We've had some requests for training on that, so also look out for that, please, later in the week, where I will be doing training for how to use price action to measure strength and weakness across all of the currency pairs. And we need to use all 28 currency pairs in order to do that, and obviously Euro Swiss is one of those. But here on the weekly time frame, you can see that we're still very much inside of the channel, but that Euro strength relative to the Swiss franc weakness showing itself through last week with a bullish impulse candle, and even today you can see how we're testing the resistance level of our channel. So dropping down to the daily time frame, you can see where we had that breakout last week on Friday. Friday was a very impulsive day, if you like, across the board. We've had quite a few overlay trades on this as well, but now that we are outside of that channel, that's no longer viable. We had winner, small winner, and a loser. on overlay. But yeah, I mean, if you're trading this, which is not my #1 recommendation on a core strategy, then obviously this is this morning would have been a setup for H4 impulse, which you can see our very first candle of the day gave us that setup. You would have gone long. You'd still be at your original risk, but yeah, it's definitely moving in the right direction. All right, so moving on to the other euro crosses. EUROCAD, as always, one of the most chaotic currency pairs of the lot. So you can see, however, that on Friday we did finally get a break out of our on the weekly time frame of our 4-wave channel. So that obviously, for those of you channel traders, is valid for you to start looking for a bearish daily impulse on this. We don't yet have an impulse candle on daily. As always, I like to look for that bit of a pullback and then have that wait for that impulse candle. Still nothing here at the moment, and yeah, in fact, this potentially could be setting up for an overlay on this time frame. But this is not really one of the pairs at the moment that is showing much potential for us to trade. So again, however, on all the Aussie pairs, here you have it again. In this case, obviously the Euro-Aussie cross, where we've been trading this short for quite some time. So there's that picture perfect bearish trend on the weekly time frame. Excuse me. And of course, that means it's been a great setup for us to trade the short on daily impulse. We've had our fair share of winners and losers. We spoke about, actually, there was an overlay trade, but absolutely perfect setup to short this before. We spoke about this last week, but now we've actually had the results. So really, really nice bearish trade that actually would have hit our take profit this morning. So really nice reward to risk, initial reward to risk ratio on that as well. So that's on the daily impulse. And then, of course, H4 impulse, we had a bearish setup, which actually got stopped out with a 3-6 rule at break even. But then we had to wait for the that retracement, I think, on daily. Just trying to remember what we were waiting for. In any case, we definitely got short again on this one last week. That must have been Friday. Where was it? Yep, early Friday morning. Got short on that. And if you were using standard targeting, it went straight to take profit. If you were using advanced targeting, you would have actually just been kicked out on your trailing stop now for quite a substantial win on that. So yeah, the Aussie pair is really, really styling at the moment. As always, be careful about not overexposing to any one individual currency. Right, Euro NZD, there we have the weekly time frame. Also, same kind of picture, just not quite as pretty as we have on the Aussie crosses. But still, you know, that's certainly been tradable. So there we had a daily impulse, which actually got stopped out for probably about 0.3, maybe just under 0.3% loss on that. So that, as I say, it didn't work out quite as well. But it's also a good illustration. I think we did speak about this last week, so I'm repeating myself. A good illustration of how the overlay works in tandem with that, where almost immediately we had a full winner on the overlay strategy. So losing about 0.3% on your core, but then winning 1% back on the overlay. Well, nothing wrong with that. I'm sure you'd agree with me. Then, of course, Friday, there we have that breakout candle. So that giving us reason to start looking for a bearish H4 impulse. Yeah, I mean, I don't trade first thing on Monday mornings myself, but certainly if you had jumped straight into something here that's not looking so hot at the moment, that's typical Monday morning behavior. But still, I mean, keep an eye out on this, guys. I mean, this is definitely closed outside of that channel. So we want to see what it does when it comes back up to this resistance level. And if it rolls over and keeps on going down. Not saying that that is going to happen. Remember, this is not a predictive exercise. We wait for the market to show us and give us the information that we need in order to apply our edge. That's what trading is all about. It's not about prediction at all. Okay, GBP Swiss, yeah, again, pound strength, weekly time frame, all of these these bullish candles sort of marching along in sequence, and a very strong bullish candle, obviously, for last week. But yeah, we've been trading this in a bullish direction, perfect for daily impulse. And there we had the daily impulse that I think we were looking at last week. 1, 2, 3, 4, 5. Yeah, so we were actually in this already from the preceding Friday. And as you can see, that's just gone and hit take profit for standard targeting. Whereas if you're using advanced targeting, obviously, you'd still very much be in this trade. Also, perfect conditions through last week to trade this on the H4 impulse. So there you have it, where we had 2 in a row. I'm just trying to think why we're looking at both of these. In any case, depending on which, if you got into both of them or not, you could see both of those were perfect H4 impulse. I think the one came a bit earlier, but either way, they were both perfect setups. Both went on to hit take profit again. Advanced targeting would have got a slightly bigger win, but that was in fact followed by a losing trade that got stopped out for a full loss. That impulse candle, it was perfect setup for a bullish H4 impulse, but we just got shaken out of the market there with that retracement. It happens. Certainly sometimes when there's a bit of a drop in liquidity for some reason, then the big boys go stop loss hunting, and it looks like that's what would have got us there. But that does happen. We don't mind. At the end of the day, we don't depend on avoiding that in order to be profitable. So had you then got in again after that, then obviously that's quite a strong bullish impulse candle. Could have done it again. You would have just had to look out for your ATR requirements being met there. So just keep managing that trade. But either way, that could certainly have been another entry for you to get in on that one. GBPCAD just going to weekly first. Again, pound strength showing itself here. We've been outside of the channel, certainly now for the last 3 weeks with closes outside of that channel, which means, of course, daily impulse. So this one's still ongoing. We've been able to trail our stop on this one, and you can see we spoke about this before, it's been going on for quite some time, but we are now at break even using the 2 5-step rule on the daily impulse. So yeah, let's see what happens there. And it's been a bit scrappier. I'm not sure if we traded this with all of the other pound strength that we've had on the lower time frames. I think we had plenty of other action, but if you were looking for it, then you would have had your fair share of winners and losers on an H4 impulse, including the H4 impulse here that would have actually just stopped out almost immediately. I think that was Friday. Oops. Great. There it is at the bottom. Yeah, looking at that on Friday morning, that didn't last very long, obviously. But that's the way it goes. But as I say, be careful about how many of these you're actually trading. You can't be too exposed on this. GBP Aussie, so both of them strong. The pound and the Aussie showing a lot of strength over the last several weeks. So you can see that correlation here on the weekly time frame where there's nothing really been doing. All we had really was an overlay several weeks ago, which we've spoken about. That was a nice winner. And potentially we might be looking for another bullish overlay here as well. So let's just keep an eye on that. Certainly we had an overlay on daily. So here on the daily time frame, again, you can see the correlation between these two. And Friday was certainly a setup for us to go short on this. It's a very extended candle, obviously. But what that will allow us to do is, because we would have actually entered this trade this morning, should this candle keep coming down, then on the overlay, we will already be able to reduce our risk to almost break even on this very, very quickly. So yeah, it's a bit of a long shot to hit a take profit there, but also remember on the overlay, we don't wait for that. We reduce our take profits progressively as well as we reduce our stop. So in fact, if this comes down and closes anywhere further than the distance from the entry to the stop, we'll actually be taking the profit off the table immediately. That's how the overlay works. Right, GBPNZD, the last of the pound crosses here on the weekly time frame. Again, you can see that there's been a bit of correlation here, but not quite as much, with the pound showing a little bit more strength against the Aussie. So dropping down to daily, we did have that breakout last week. So there was some activity for you to be able to trade the lower time frames here. Again, we didn't really do much on these because we already had enough action on the other pound pairs. But had you done that, then certainly there was at least one H4 impulse that eventually went and hit take profit. But that was it, because then on Friday we had that very strong pullback with both the Aussie and the Kiwi showing a lot of strength. All right, so moving into the other crosses, CAD Swiss on the weekly last week has given us a breakout. We actually had a losing overlay on this one. It was a setup to short this on the overlay, but that's fine because we had a very strong breakout last week, which means dropping down to our daily time frame and looking to trade this in a bullish direction. So for a daily impulse, if you're waiting for that pullback before you go long, not a bad idea. Otherwise, certainly, because we're in this bullish impulse wave on daily, you could even drop down to H4. Certainly, we did that last week, and you can see this was a nice, solid winner on CAD Swiss with an H4 impulse that we got into at 8 o'clock on Friday morning, went and hit take profits before 4 p.m. So very, very nice, strong trade that. So if you're waiting for that pullback today still, it's still valid to go long on this. Now you can see all of these core strategies were certainly giving us a lot of action. Aussie again, another picture perfect trend on the weekly time frame. So also two nice setups for daily impulse. So depending on whether you were waiting for the pullback or not, for folks who didn't, you were gotten in a bit sooner, you would have survived that retracement using our 2 5-step trade management rule. For those of you who did wait for the pullback, you would have gotten long over there. I think we did talk about this before, certainly last week on the 12th. So I beg your pardon, on the morning, we did speak about this last week, Monday. So you would have gotten long with Friday's impulse close first thing on Monday morning last week, and that actually eventually hit out take profit very nicely on Friday. Now, we had a slight retracement as well through the course of last week. That was in fact a bearish setup for an overlay, which got stopped out as we had the resumption, which is absolutely fine. So you can see how the overlay, which is there to protect us, to help us minimize the downside on our account, it was doing its job, but when we no longer needed that downside protection, as our trends sort of resumed, we got kicked out of those overlay trades, which is as expected. All right, Aussie CAD, same picture. Once again, you had to be careful here, but similarly, we had that bullish. We've been in a bullish daily impulse for some time, and that's I don't think we were even able to get to break even on this one very easily, but it survived. We again had a losing overlay. This one's still going, so let's wait and see on that one. But it's getting pretty close to our standard take profit on that. So Aussie Kiwi. So there's that very long and strong bullish move after that reversal with the Aussie strength against the New Zealand dollar. So we just haven't been trading this. It's no valid WM pattern. And even if we were to look here on the weekly time frame, as you can see, what we did have was a winning overlay. That was nice on the weekly time frame, but deep inside of the weekly channel here, no WM patterns. Likewise on daily. So no core strategy setups at all, which is fine. Here we have Kiwi Swiss. Just looking at weekly first, again, picture perfect. As we spoke about beforehand, there was some weakness here. So it's not a valid W pattern, but certainly for the channel traders, it's been 100% tradable. We had, as we discussed last week, we had that losing daily impulse. So we had a winner a couple of weeks ago, followed by a loser, and then another perfect setup, which this morning obviously looks like it's going to hit our take profit on that one. So that's been very nice. And of course, we are also now outside of our daily channel on this, which means that this week, so far anyway, looks like conditions are fine for our H4 impulse. Certainly that wasn't the case last week. I'll be waiting for that pullback and potentially looking to get long again on that. Just watch your time criteria. And the last one, Kiwi CAD, weekly first again. This one, Canadian dollar often their crosses, just a lot more challenging to trade. We did get into a bearish overlay on this, which would have been kicked out this morning, it looks like. But we're inside of that channel. It has not broken out. It's respecting that resistance level. So nothing doing here for us at all at this stage anyway. On the daily time frame, we've also very much inside of the channel. If we do get that breakout, different story. I think we spoke about that winning overlay, not last week, the week before. There hasn't been another overlay set up, but we might well be getting an overlay set up if we do test, if we have a test of that level to short this market as well. So on the Kiwi CAD. So one last look. I'm not sure if I updated on this machine. No, I didn't. On gold, gold doing its thing. It should be outside of the channel. It's pulling back on Friday as well. But you'll see on the weekly time frame, we're very much still inside of our channel, respecting that support level perfectly last week, in fact. So this was also an interesting setup for those of you who are Elliott theoreticians or Ellioticians. I'm sure you all would have recognized ABC pattern with a wave 1 here and a 618 retracement to go short to look to catch wave 3 on the daily time frame. So we've got some training coming up in the next few months on Elliott wave theory. And for those of you who do count waves, I'm sure you would have all spotted that on gold. All right, so that's it from me. A bit of a longer session today. I hope that's useful. So last week, definitely interesting week. I think it proves very much how important it is to keep taking the next trade. Folks who got a little bit downhearted in the early part of last week would have ended the week really kicking themselves for not taking the next trade, because it ended up being a really good week for us. Certainly we had our fair share of losers, but as always, when you're applying convexity, your winners are just so much bigger. And it's certainly with a week like last week, when the last few weeks, in fact, it's been really profitable for us on our core strategies. Right. If you have any questions, as always, please do pop them into the comments below. I'll be happy to answer those. Once again, look out for training for those of you inside the members group. Later in the week, we will be looking at scoring the currencies on strength and weakness to help you to select those which are the strongest versus the weakest, and also so that you don't overexpose yourself to any individual instrument. It's always a challenge when, as we've seen, both the pound and the Aussie, they've been all of those currency pairs are going very well and very tradable, but you don't want to overexpose yourself. So the question is, which pairs do you choose? Which ones do you go for, and which ones do you not go for? So we'll have a look at that later in the week. If there's anything else you'd like me to revise for you, please let me know. Happy to do that. If there's anything in particular that you folks want me to cover, those of you not inside the members group, likewise, I'm happy to do a special training session for you as well. So any questions at all, feel free to post them below, and I'll do my best to get back to you on that. Guys, I hope you have an awesome trading week. As always, be careful, manage your downside first before you look to take your profits. If you're always looking to manage risk first and you let upside look after itself, it's very difficult not to be successful as a trader. Have an awesome week. God bless. Bye for now.